baby, we're diving down into the stocks that I bought in March, specifically the dividend stocks and how they're performing to the end of March. We're going to talk about the dividends I received, that juicy passive income, a record for my investing career of over $1,700. And then what I'm buying now moving into April. We're going to talk about the stocks that I want to purchase in my TFSA, RRSP, my regular brokerage accounts, my corporate account, and so much damn more in between. But if you like learning about my $420,000 dividend stock portfolio here in Canada, consider damn well hitting that like button. And let's get right into this, folks, with first and foremost, I want to talk about the good old Michael Burry, the guy that made $1 billion shorting the 2008 financial crisis, who can't get it right anymore, saying, hey, I was wrong to say sell. And honestly, I'm always a net buyer of the market, because let's be real, the people that feel like the biggest idiots are the ones that didn't buy the freaking dip. Now, obviously, there's nothing fun about buying the tops, but if you buy the dips and the tops, you're always going to get that cost average. And I'm trying to outperform the market by specifically buying the major dips in the market. And he had to follow this up by saying, hey, going back to the 1920s, there's been no buy the effing dip generation like you. Congratulations. I feel like he should have posted at the end, you idiots. I feel like he's very snooty with this comment here. But taking a look at the S&P 500 year to date, we got this major dip in March, mid-March here, that now has recovered by about 6% on the S&P. If we take a look at the last year, I kept telling you guys, like, I'm telling you, like, if you're not paying attention to this channel, I hope you are, and not that this is financial advice, but I've called this damn accurately. In October, I said, hey, I threw over $10,000 in the market here. And, you know, I keep trying to buy these low periods because it's so easy when everyone's screaming and freaking out to just pick the shares up. And that's exactly what we did. And I'm going to share that with you right now. So what stocks did I buy on these big dips through March? Well, of course, the Vanguard Canadian High Dividend Yield ETF. I picked this up at a fabulous time as I show you the actual buy positions on March 17th. I picked up 36 shares at about $1,461 for about $40.33 in my regular brokerage account. And in my corporate account, I picked up another $1,180, 29 shares at, again, at $40.36 on March 17th, which is kind of crazy to consider that was the exact bottom for March of this ETF. Now, obviously, this one doesn't move like the S&P 500 or like some of the NASDAQ stocks would, but nonetheless, it's still up 3% from the time I purchased that. So, you know, $2,600 total invested, already up 3% coming into the end of March. Again, I hope we revisit those lows. I'd rather buy when it's down, but man, it's so crazy that, you know, when people are freaking out and losing their minds, just buy the stocks. You'll see a recovery in your portfolio as I'm seeing now. I was down a lot. If you go look at my last week portfolio update, right now, we're down about $3,600, sitting about $394,000. About 31. I got some more checks. I'm probably sitting closer to 32, 33,000 in cash. This is going to update dramatically because I have taxes due. I just paid my HST. I owed a little bit more than I was expecting, so I do have another cash account outside of what you see in my portfolio here. But I'm probably, my guess, by the end of my tax filings, I'm going to have to pull maybe another $5,000 out of here at most just to finish finalizing. So, you know, I'll probably be sitting closer to $25,000, $26,000 to have as investable cash in an emergency fund. It's always good to have that extra cash. You never know. When the government wants money, you just give it to them. But taking a look, guys, I did collect a lot of dividends this month. I brought in $1,707, one of the best months thanks to VOO paying out, SCHD paid out a nice healthy chunk, and of course VDY. And it's really cool because TSM is going to be paying in April along with VDY, and we'll go back into the quarterly payments with SCHD and VOO. But that gives me a total for the first quarter of about $2,886. Keep in mind that is after withholding tax in my accounts. So, you know, we're right on track to be making around $12,000 annually or $8,000 a month completely divided out, which is super awesome, super cool. And if you guys enjoy the way you see my portfolio tracked here and you want to track your portfolio the same way with no third-party tracking your data, you know, you can bring all your accounts into one place like I do. Come to portfoliospreadsheet.com. It's one price, $14.99. Buy one, get one tracker for each platform. And my personal finance trackers are sold separately. Buy one of these guys, track your personal finances, and see the money you have left over every month to invest in the stock market. Let's talk about what I'm buying. We'll come back to this to reiterate, because firstly, taking a look at my individual brokerage accounts, because I do have a lot of cash right now built up, which actually isn't included on my spreadsheet because these were just the dividends. So in my, well, firstly, my RRSP here, and this is the first account that I'm going to load up on, thanks to me having to pay taxes. Turns out I over-contributed to my RRSP last year, kind of screwed me there. So I actually don't have as much room this year as I thought. I'm only going to have about $900 worth of room, but I did receive 660 US as well. So I'm going to take 900 CAD, convert it to US, which will probably be closer to 556 if I had to guess. I'll convert that in. That'll give me what, maybe 1200 in US that I'm purely going to put back into SCHD. I'm going to keep buying this because my goal is to get over 100,000 invested in SCHD, which currently I'm sitting at about 85,000. The way I'm going to get the rest of it contributed is going to be through TSM. I'm just using TSM as a short-term placeholder. Right now, this is my tax-free savings account where we can see I've got almost $500 in CAD, another 270 US from the dividends, and TSM will be paying out next month, which will jack the US dividends again. But eventually I am going to sell TSM. I'm just using it as, again, I think an undervalued play, and until it gets to a relative fair value, which if it takes a year or two, I'm willing to wait, but I am going to sell the vast majority of it to eventually put it into SCHD, maybe a little bit more VOO, and that's what's going to finish topping that up, because realistically, I want to get about, 100,000 in VOO, 100,000 SCHD. I've already got 150,000 of VDY, so I'm probably not going to be buying any more of that. TSM, I've got 34,000 between all my accounts, so that's going to be a really healthy amount of extra capital, and considering the stock's doing exceptionally well, might not be the truth moving forward, but subscribe for those updates, and that's really going to load me up. So I'll have some extra cash beyond putting over 100,000 in SCHD, and from there, what I'm likely to buy in my TFSA is going to be VCE. I really like pairing my long-term retirement accounts with very stabilized ETFs at this point, and I like having one dividend ETF and one broad-based economy ETF. So SCHD would be the dividend ETF, and VOO would be the broad-based S&P 500. And in Canada, I really like VCE, and VDY would be the dividend pair. But outside of that, I am looking at adding one more ETF. So SCHD, it's still trading at a relative discount, so I'm going to be picking this one up soon. Hopefully, it'd be nice to see it pull back again. VCE, again, the Vanguard FTSE Canadian Index. I'm going to slowly start using the dividends that I receive in my TFSA to start buying this guy, so I have like a nice even split between the US and Canadian economy. In my regular brokerage accounts, like my corporate account and my regular brokerage, I'm looking to continue buying a new stock, which is probably going to be the iShares S&P TSX Competent High Dividend Yield Index. Now, this one doesn't have, I would say, the best performance and comparable to VCE or VDY, but it pays a much higher yield at almost 5% after the expense ratio of 0.2. You're still getting well over a 4.5% dividend. And in my regular brokerage accounts, especially my corporation, I have to pay out the dividends or I get a massive tax bill. They waive the dividend taxes if you pay it out to employees. So that's something that I'm going to utilize as a tool in my corporation and along with my regular investment account, because I do like getting that income. And then I can waive that income because obviously I'd have to pay tax on it if it's just sitting in a regular brokerage account. But you can use the loophole of just contributing that at the end of the year to your RRSP if you don't use the dividends, because if I'm not using them, they're just sitting there. Hey, contribute them to RSP, to get rid of the tax, defer it to later down the road when I withdraw it. It's just something you can use in an extra toolbox to avoid taxes. But I do like this ETF, and it's one that I am considering buying to continue diversifying my dividend income. Now, outside of that, let's talk about some of the individual stocks. Personally, I'm not buying these, but I can't help but look at these and say, if you wanted a deal of a lifetime, you're a younger investor, you're looking for way higher yields, I would be buying the banks individually. There's ETFs that hold all the Canadian banks. You could also just buy VDY, because when I'm buying it, I'm technically buying 25% of my money is just going to Royal Bank and Toronto Dominion, because VDY is heavily concentrated in the Canadian banks. If you're into US banks, hell, we've seen dumb money. I've been watching a lot of YouTubers pick up on this, guys. The banks are going to recover. This isn't 2008. I don't think it's going to get that much worse. Yeah, we could see a bit more downside, but now's the buying opportunity. So if you like banks, banks are banks. They're like Pokemon cards. You'll want to collect them all, guys. So that's one of the individual stocks that I'm still paying attention to, along with REITs. But I really like the small cap sector still. Aduro Clean Technologies has been posting a lot of news. I'm still holding this company, my corporation. I'll talk a little bit more about this when I do some updates on it, considering this company is just starting to commission their R2 plastic reactor, where they're going to be able to turn waste plastic straight out of the ocean, basically, into renewable fuels. Really cool stuff. Palantir is another really interesting one. Year to date, this one's up 32%, crushing it. And this is one that I'm watching a lot as kind of, with the AI discussions that continue to come up. I've talked about that with some sponsors on my channel today. But yeah, Palantir is another really intriguing one. But from the broader view perspective here, here. The markets are bouncing a lot here. Tesla's back over 200. We're seeing a lot of green coming into the weekend, which should make all of us sleep a little bit more peacefully at night. Even crypto's holding up beautifully. But I'll have to pass the question off to you at this point. I'd love to know what you're receiving for dividends. Are you focused on dividend stocks? You buying some of these small cap growth plays? I feel like this year is going to be a comfortable year of buying, and hopefully we just see a residual flatlining, these nice up and down waves, because it's just it takes the edge off of FOMO, of everything flying and you feel like you're missing out. And also when the market dips, there's so much damn fear at this point, like you just don't trust that and you just take it as an advantage. You'll do all right. But I'll pass that question off to you.